Now, it doesn't matter what the story is. What matters is sensitivity to funding conditions. That's why markets start moving together. Even Bitcoin is now pulled into the same system through ETFs and institutional pipelines. The separation is fading. Just flow. Stress in this system rarely looks like collapse. It looks like friction, a weaker auction, a wider spread, a slightly tighter funding market, nothing dramatic. At a certain point, something becomes visible. Not perfect correlation, but shared sensitivity. Equities, bonds, crypto, credit. There is a strange silence in global markets right now. Not the kind of silence that comes from peace, but the kind that comes when something is being held under pressure. Prices are still moving, news is still flowing, headlines still look active. But if you've been around markets long enough, you can feel it. Something has changed.
Because now assets don't really behave independently anymore. Stocks move with bonds. Crypto moves with equities. Real estate reacts to yields. Everything is starting to respond to the same invisible force: liquidity. Markets are no longer pricing growth. They are pricing access to money. Most people think the financial system is about companies, earnings, or innovation. But underneath all of that, there is something far more important: debt. Not as a problem, but as structure. Governments refinance it, banks roll it, funds build strategies around it. And everything only works if one thing stays stable. Money must constantly flow. When that flow slows even slightly, everything adjusts. Not by breaking, but by recalibrating. At the center sits one reference point: US Treasury markets. And yields are not just numbers. They are the global price of time. Capital is no longer allocated based purely on belief. It is allocated based on behavior under stress. Funds now ask, what survives if liquidity tightens? That single shift changes everything. Now, it doesn't matter what the story is. What matters is sensitivity to funding conditions. That's why markets start moving together. Even Bitcoin is now pulled into the same system through ETFs and institutional pipelines. The separation is fading. Just flow. Stress in this system rarely looks like collapse. It looks like friction, a weaker auction, a wider spread, a slightly tighter funding market, nothing dramatic. But beneath that calm surface, something is building. For over a decade, the world ran on cheap money. Now that structure is being refinanced at higher yields, and banks reduce risk, funds reduce leverage, institutions become defensive. No panic, just adjustment. But pressure doesn't disappear, it accumulates. Inside institutional desks, conversations have changed. It's no longer, what do we buy? It's, what breaks first if liquidity tightens? Survival now matters more than performance. Hedge funds watch funding conditions. Pension funds adjust exposure. Risk systems react automatically. And slowly, confidence is replaced by calibration. Belief is replaced by probability. At a certain point, something becomes visible. Not perfect correlation, but shared sensitivity. Equities, bonds, crypto, credit, all responding to the same variable: liquidity. Different instruments, same rhythm. This is synchronization, not control, not coordination, dependency.